Hello, this is Sergio Marrero, and tonight we're here at Rebel One Live with Carlos Torres de la Cuba, who is a managing director of AMG Block. Thanks for joining us, Carlos. Oh, I think you're muted.
Hey,
there you go.
There we go. Yeah, sorry about that. Thanks, Sergio. Glad to be here.
Yeah, happy to have you. So for those that don't know, I'll just give a brief introduction of Carlos. So he went to Universidad Iberoamericana he was an industrial engineer at Mexico City, went for his MBA at Holt University in Boston, worked at HSBC, continued his career in asset management to go on and work in venture capital. And for the last 2 years has been working on his fund focused on blockchain and fintech. So thanks for joining us. Carlos, I'll turn it over to you. Can you share more with the audience? What is AMG Block?
Yeah, thanks for the intro, Sergio. So AMG Block, we are an early stage VC fund focused on fintech and blockchain in Mexico and Latin America. You know, Mexico right now, alongside Brazil, is the leading fintech market in Latin America, but there is still a huge lack of early stage funding. So we see fintech, across different business verticals. So payments, loans, wealth management, insurtech, just to name a few. And blockchain, we see it more as the enabling technology in traditional businesses. So we don't do any crypto or token investments. We see more the applications of the technology in industries like healthcare, legal, supply chain, just to name a few. Obviously, given the early stage nature of the technology, part of our investment thesis is to invest, at the early stages of the tech, right? In terms of the sort of the VC landscape in not only Mexico but other Latin American countries, it's still I'd say underdeveloped asset class, right? In Mexico alone, we probably have less than 50 VCs investing across the entire nation, across entire different industries, across different stages. So we believe and we've identified, this huge market opportunity to continue funding both innovation and entrepreneurship in early stages in Mexico and Latin America.
Excellent. And when you talk about fintech and blockchain, can you talk a little bit about what types of entrepreneurs are you looking for? What size checks do you write? If you can give a little color around that.
Yeah, so just to give you a little background on sort of the investment dynamics. The investment dynamics in the region are a little bit different than other more developed markets. So part of our investment thesis is to invest at the seed stage, tickets ranging from $50 up to $250,000, early stage 250 up to 500,000, and early growth 500 up to $1 million. Obviously, an investment of $250,000 in somewhere like the U.S. could still be considered, friends and family. But the reality is that an investment of this size in Mexico and in other Latin American countries could give a startup runway up to a couple of years, right? So obviously, those investment dynamics, the valuations are obviously very different. So that's sort of the target stage that we are sort of looking at. And in terms of what sort of founders or startups within these specific industries, we pretty much look at every type of deal. I mean, we don't look right now, obviously, at how much revenue you're generating. We try to look at past those fundamentals and take more of I'd say a human approach in terms of funding to these type of early stage startups.
And I know you're from Mexico and the region, but is that the primary reason you chose Latin America? Why did you choose LATAM and to focus on fintech and blockchain?
Yeah, so I think it goes back, you know, to give you a brief overview on my personal life. So both my parents are from Peru. They came to Mexico over 30 years ago. So I have you know, most of my relatives still in Peru. When I was young, I lived in Argentina for a while. I have had, you know, sort of the opportunity to travel to different Latin American countries. And the reality is that this, you know, cultural resemblance between some of these Latin American countries. Brazil is a little different, you know, in terms of culturality and the language. But outside of Brazil, I mean, Argentina, Chile, Peru, Colombia, Mexico, we all have a lot of similarities in terms of, you know, how the cultural and the market operates. And that's why we sort of decided to not only invest in Mexico. Obviously, most of our deal flow right now is in Mexico, but you know, the reality is that the VC landscape in all of these countries is still underdeveloped. So it's a way for us to continue sort of expanding the entrepreneurship in the region. And the other aspect is also related to how, you know, sort of some of these market dynamics work, right? A lot of these startups that start in Colombia, Argentina, even Peru, they see Mexico as the natural next step in terms of their business expansion. Maybe because of obviously the how big the market opportunity is in Mexico, but also because they see it as a bridge to the U.S. market, right? So it makes sense to have, I'd say, this regional outlook and start looking at some of these solutions, innovations, and startups in the region as a whole. You know?
Yeah, I find it really fascinating looking deeper at, I know when I started doing my research on the blockchain space,
Yeah.
I learned a lot about Sapo and Wences Casares, who started that movement and well, accelerated some of that movement in Argentina,
Yeah.
And how, you know, people in Argentina, people in Venezuela used, you know, Bitcoin
Yeah.
as a way, as an alternative to their currency.
Yeah,
And
exactly.
yeah,
I mean, the macroeconomic environment in the region, in countries like Venezuela, Argentina, has forced, you know, the population to look at alternatives. And Bitcoin and blockchain, obviously, the technology behind Bitcoin enables them to, you know, put their money on a decentralized store of value, right? And not, you know, I mean, I'm sure you've seen some of the videos or photos of people in Venezuela playing around with paper money because it's pretty much worthless right now, right? So you know, the technology and the innovation going on around crypto and blockchain in a region like Latin America makes a lot more sense, I'd say.
yeah. If you look at regions too, right? It's like the U.S. and Europe, they're just so developed. They see Bitcoin and they're like, oh, I don't need to use that because my currency is dependable,
Exactly.
right? And then you go to places, you look at Africa as a continent, and many of there's some lack of infrastructure to really move from one currency to another, like in terms of banking infrastructure. I
Yeah.
would say Latin America is unique because it's like developed, but still old world in some ways.
Yeah.
So
Yeah, it's and that's part of the you know the market dynamics. I mean, you have, you know, in Mexico, one of the richest guys in the world, Carlos Slim, and you could probably encounter some of the poorest people in the globe, right? So this whole spectrum of people living in a country like Mexico enables, you know, these sort of solutions to actually work, right? The way we see it, I mean, not only blockchain technology, but technology in sort of developed markets, they tend to solve convenience issues, right? In emerging markets, they solve, I'd say, structural problems, and they, you know, dive deeper into the problem itself, and that's where we see, you know, some of the innovation going on with fintech and blockchain companies.
great. That's great. I want to share with the audience, and I want to allow you an opportunity to tell them about your story. You're starting up this fund. You've been focused on the venture capital space for some time, but started as an industrial engineer before then going to HSBC as a corporate relationship manager. What moved you from first focusing on engineering and now starting your own fund? Can you share a little bit more of that story?
Yeah, happy to. So yeah, I mean, I studied industrial engineering, as a means to sort of have a general view on what I wanted to do, right? So I started, like you said, in corporate banking at HSBC. Managed a portfolio of around 150 corporate clients through the bank's obviously services and products. Then I continued my journey at a fund focused on sustainable projects, especially in water and energy here in Mexico. Then I worked corporate banking for a regional bank, which is currently one of the leading digital adopters in digital banking in Mexico. And that's around the time when I decided to do my MBA. So I did my one-year MBA at Holt in Boston, with a focus obviously on private equity, venture capital, corporate banking. I was still sort of looking at the space. I started angel investing around just before doing my MBA. So that's when I started looking at the alternative asset class. So after the MBA, I joined the venture arm of a family office in Boston that wanted to tap into the startup community, obviously in Boston. Looked at different industries, different stages, developed obviously relationships with investors, startups, prepared investment memos, and that's when I really dove into the sort of the VC asset class. So after my work permit expired, I returned to Mexico and joined as an investor and director of finance for a fintech startup that provided loans to the underserved SME market in Mexico, which is obviously a huge untapped opportunity. And that's when we sort of realized that that there was this lack of early stage funding in the region, a lack of sometimes understanding of the industry, and we sort of identified obviously this market opportunity. And that's around the time when I started digging deeper into blockchain itself. As director of finance, started looking at different fundraising alternatives, came across this whole ICO boom, which obviously sort of revolutionized sort of the crowdfunding space with crypto, right? And this application of smart contracts in the ICO boom sort of really caught my attention. But obviously, as we now know, the ICO boom turned out to be a little hectic, to say in some way. A lot of these projects didn't come to completion. A lot of money was lost. So this evolution of the ICOs into the regulated space, or as it's currently known, the security token space, really caught our attention. So we started looking at obviously the technology, the applications going on. Decided to do a master's in fintech and blockchain last year with a Spanish university to sort of dive deeper into the pillars of fintech blockchain, look at some of the applications, solutions going on in different parts of the world. And that's how this specific sort of investment thesis in fintech and blockchain came into place.
And what are your thoughts around investing in, investing in a startup working in the space versus investing in a protocol? When I say protocol, I mean investing in buying Bitcoin, buying Ethereum, buying one of the Litecoin and etc. Like why should I invest? Or not why should I invest, but what types of startups would I invest in versus putting money into a protocol I believe is legitimate?
Yeah, so I think it's two different investment pathways, right? I mean, when you invest at the startup or equity level, you look at some of the fundamentals, right? The team, the technology, the market opportunity, sort of the timing of the business. You know, how scalable the business is. Can the business obviously survive or thrive within their target market? You know, some of these fundamentals that we as, you know, early stage fund managers look at traditionally, right? When you invest at the protocol level, be it, you know, either Bitcoin or any other different type of cryptocurrency, you know, it's more on the tech side, more on sort of the applications of the technology or the token itself. And I'd say it's more of a technical analysis, right? How, you know, the consensus mechanisms work, right? If it's proof of work, proof of stake, delegated proof of stake, you have to sort of dive deeper into the tech aspects and understand, you know, the number of nodes probably behind it, how decentralized actually some of these protocols or crypto tokens are. So it's I'd say a different approach into investing, you know, either at the equity level or at you know, a token level. But right now, given obviously the early stage, I'd say, nature of the technology, I mean, we are sort of able to invest across different the entire stack, right? So at the infrastructure level, at the protocol level, at the application layer. So it's, I'd say, interesting in terms of how the market is developing and some of these solutions that have been going on coming on into the market. It's definitely an interesting time to be in this space right now.
Can you share with the audience a little bit more about what do you mean by the infrastructure level and what do you mean by the application level?
Yeah, I mean, so the infrastructure layer, I mean, you have to consider all the players that are required, right, to operate a crypto token or a crypto asset, right? You have to talk about, you know, the custody of the assets, the exchanges, right? The even the insurance. Some of these exchanges have to have certain insurance to provide, obviously, certainty to the investors trading. And I mean, the protocol layer, you're talking about different blockchains, right? So blockchain is sort of the denomination, but there are obviously different blockchains like, you know, Ethereum. In Latin America, we've seen a lot of applications with RSK, Corda, Celo. You know, EOS is more of a global one. That's sort of the protocol layer, and then you have the applications being built on top of some of these layers, right? And so, you know, all this DeFi craze has been built obviously on Ethereum, which is sort of the right now go-to blockchain because of, you know, the number of developers and the number of players within that specific ecosystem. But other, you know, protocols have started to get attention because, you know, the cost to operate or the timing of the transactions could be faster. So it's, you know, some of these applications being built on different protocols, specifically within DeFi is an interesting space. And then you have this whole interoperability, right? The ability to sort of operate between all of these different blockchains is something that is obviously required, right? Because you don't want to have only Bitcoin and you all of a sudden want to start trading with the Ether, which is the crypto within Ethereum, right? So you're going to have to go through an exchange, which is a centralized party that will enable you to sort of make that swap between different different tokens or different crypto assets, right? So this, I'd say, whole infrastructure being built around the crypto sphere is the one that's, you know, being built, and, you know, the opportunity to invest in all of these different stacks is, I'd say, open for business, you know.
Great. And what are the particularly, let's talk about fintech associated, but what are your, you know, particularly in Latin America, what are the areas of fintech that you're most excited about that you think are the biggest areas of opportunity?
So I'd say those are two different things. I mean, the biggest areas of opportunities right now are obviously payments, lending. Those are two of the right now biggest and most profitable business fintech models in Mexico. Payments relates also to I'd say the entire ecosystem. I mean, if you look at, for instance, remittances between the U.S. and Mexico, that corridor is one of the biggest in terms of remittances in the world, right? People from the US sending their money to their families in Mexico so that they're able to pay, groceries or housing, whatever it is that they have to pay. So a lot of these solutions are trying to be being built around, payments. Loans is obviously an interesting market. I mean, the SME market in Mexico, 98% of the GDP is supported on the SMEs, but banks obviously target the other 2%, right? So SMEs are always looking for different ways and alternatives to finance and continue growing their business. So all these alternative manners in which SMEs are able to fund their business is obviously an opportunity. And now, in terms of what I'm most excited about, I love all of these wealth management solutions being built right now. Right now in Mexico, obviously, wealth management is still at an early stage. I mean, people don't have that financial educational tendency to save some money and invest in alternative assets, right? But when you look at the sort of some of the market dynamics, I mean, 80% of the population has a smartphone, right? So you're able to sort of reach the target population and start teaching them different ways that they can invest, different asset classes that they could look at, and sort of doing it in a I'd say in a fun manner, and bridging that, I'd say, educational gap that's obviously lacking in the space. To give you also a little bit of a background in fintech in Mexico, a couple of years ago, the new fintech law was sort of developed, which regulated particularly payments and crowdfunding. When the bill was being drafted, virtual assets were included within that specific fintech law, which would potentially enable further crypto adoption. But after we changed governments in 2018, the central authorities realized that they didn't really understand what blockchain was. So they decided to put virtual assets sort of in a sandbox, right? So all of these novel models being built, not only with crypto and blockchain, they're currently in sort of the sandbox area of opportunity, and payments and crowdfunding is currently regulated. But when you see it as fintech as a whole, you see wealth management is not regulated, prop tech is not regulated, insurtech is not regulated. So there is a lot of innovation going on all these different business verticals within fintech, and it's exciting to be right now in the space.
Excellent. Like I mean, there's in terms of supporting fintech, blockchain, there's early stage investments, because you talked about investing even 50,000, right? Like at the earlier levels, and the market may not have the same infrastructure as the U.S. or portability to go from country to country. What are some things that, or what is some unique support that you need to give these startups in order for them to succeed, particularly in Latin America?
Yeah, I mean, obviously it depends on the stage of the business, right? So part of our thesis, like you said, I mean, seed stage, we could be investing between 50 to 250,000. That amount of money, gives a startup runway up to a couple of years. So when we invest or look at some of the startups that are in this particular stage, I mean, we do have to take more of a hands-on approach, right? Help them define sort of the target market that they want to serve, business fundamentals, financials, help them even recruit, whether it's a technical co-founder or more of a finance background that they're looking at. The idea is obviously to always be available, for the entrepreneurs, and sort of understand what their pain points are, and sort of help them work through those. When you're looking at some of the startups within early growth, I'd say that the dynamics are a little bit different. I mean, you take more of a macro approach in terms of maybe sitting on the board and looking at sort of the business a vision and where they want to take it in the next 5-10 years, right? And be supportive along the way in any way that you can, right? So this hands-on approach depends on obviously the stage of the business, sometimes even the vertical of the business. I mean, I love, for instance, the blockchain applications on the music industry, right? I could provide more value in terms of how the technology or is being applied, or even the financial aspect of the business. But how the music industry operates, that's a completely different aspect, right? And we'll probably sort of leverage our network and try to support with some experts in this particular case, the music industry. But it depends on sort of each particular case,
Yeah. Can you give a little color? You said, if they're raising 250K, it could last, instead of a 12 to 18 month horizon, it can last them several years, right? In terms of, okay, what, what at that level that you're investing, call it like 50 to 150,000. What are some, like, can you describe the valuations, and at that valuation, like what is the typical stage for some of these and like newly formed startups?
Yeah, I mean, valuations, if so the whole
more,
idea
more at the earliest stage.
Yeah, so I mean, part of obviously a VC or our VC strategy is to take minority equity positions, right? So that means owning less than 50% or 51% of the company. But what we don't want to do is sort of demotivate the entrepreneurs at the very beginning. So if you take 40% right out of the bat, you're pretty much cutting a leg out of the entrepreneurs right now. So if some of the, for instance, opportunities that we've looked at that are looking for a $250,000 investment, you could get 10-15% equity out of these specific opportunities. So we're talking about valuations that could range from $1 million up to $2.5 million right now. Obviously, the idea is to sort of help these companies get an opportunity to even double down on some of these investments, and obviously retain some of these equity positions that we are looking at these earlier stages. But I mean, it's some of these startups are so eager to find funding that they even come out, and say, listen, we're raising $250,000 for 30% of the business. You're like, I don't want to do that, right? I don't want to take 40% of what could potentially be your, retirement right out of the bat. And so it's something that we also sort of work with entrepreneurs, making them understand that, we don't want to do that. We want to sort of take more of a supportive approach and help them along the way, and then eventually raise, pre-Series A, where you're still looking at some of bigger valuations. But I mean, it's interesting to see those dynamics, because I don't know if you read today that Nubank, which is Brazil's and Latin America's biggest neobank, just raised a $400 million at a $25 billion valuation, right? So this also tells you a lot about the range in terms of how early you can start investing, or how big you could get in Latin America, right?
Absolutely. And that's the question, is like, what is like, when does I say every startup has to meet the market at some point, and the market is not going to create the markets won't going to want to see revenue and profitability. So no, I appreciate that insight, especially as can you share with the audience, a little bit more? I know we're coming up on time, but can you share with them what's next for AMG Block?
Yeah. I mean, we're always looking to connect with, startups in the space, whether it's fintech, blockchain. Obviously, given the global nature of the industry itself, I mean, we've connected with startups in Europe, in Asia, obviously working on fintech solutions. Maybe they're not looking at Latin America right now, although I obviously would encourage them to look at the market opportunity. But it's a way also to sort of see some of the trends going on in different parts of the world, even if it's more on developed markets. I mean, all of these, challenger banks, for instance, in the UK, which is one of the leading fintech hubs in Europe, have started to look at the Latin American region, and Mexico is there. Sometimes Mexico and Brazil sometimes are their natural next step to tap into this ecosystem, right? So I mean, always happy to connect with professionals in the space, whether it's to learn more about what you're doing. If eventually you're looking at the Latin American ecosystem, which is obviously culturally and the market dynamics might be a little bit different than where you're currently operating. Happy to support in any way, and expand this I'd say much needed Latin American entrepreneurship globally.
Awesome. Love it. So thank you, Carlos, for sharing your a little bit about you and your story and path to starting your career in venture capital and your new fund. So congratulations. And for everyone watching, this is Rebel One Live. Look forward to tuning in next week with more VCs and CEOs in the space. So thanks again.